Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so, this is pre-market prep for Thursday, March 13th, and I got something in my throat. Excuse me, it's getting kind of tough doing these pre-market preps every morning live with the work schedule. But anyways, let's dive into the charts. Going to go over the usual ones. I do think that we do have a top in here for the UVIX. I'll go over that, but I did also want to mention that I will be going over Intel later in the video, which did have a pretty nice pop yesterday in the after hours, so excited to go over that. But here, coming back to the UVIX, which is the 2x long VIX futures ETF. As I had mentioned yesterday, it did look like the day before, so that would have been on Tuesday, did look like we had a topping signal there with a big wick to the upside, and then a close in the lower quarter of trading for the day, hitting a high on Tuesday the 11th at a price of $52.99, closing above that 200-day moving average there, however, not closing above Monday's high. So that did suggest some weakness that we might be pulling back. Also, volume was, a little bit elevated on that day relative to the previous day, but generally as the price had been going up, volume had been coming down, so that did suggest weakness. And then, big wick to the upside, topping tail there with a close in the lower quarter. Again, same thing yesterday on Wednesday, having hit a high of $48.28, which was above that 200-day moving average, but did quickly get rejected from there. And I do think that we could be heading back down to the 21-day and or 50-day moving average here, which range from about $33.50 down to around $22 a share. But we could also be heading down to this level here at $30, the orange level marked there. But I do have this alert at $32 a share because I think that's going to be hit, whereas 30, may not. So yeah, I would look for this to continue down, but it's quite possible we could get another bounce and maybe we do head up to around $55 a share. So good to keep that in mind. As I forgot to mention it, yesterday we closed at $42.53, being down about 10% on the day. We are bouncing a little bit, about about 64 cents or 1.5% in the pre-market. If I do flip over to the 10-minute time frame, we can see that it did just kind of stay more or less flat in the after hours, but then we got a gap up, kind of a cool off, and we are now fading back lower. It looks like the high in the pre-market was at, let's see, $45.74, but yeah, looking like it is pulling back there. So we'll have to see where we end up starting the day. And I do think that it would be good for, us to start, within this candle, or, at least get into the, let's see, the close 42.53. If we open above that, then there's no gap to the upside, and we can just, make our merry way down, heading back towards, this blue line that I've marked here. That is at $40.70. There was a gap over here that was previously filled. I'm actually going to just delete that line because I do have this alert here for $40. That's just being kind of a psychological level. But maybe what I want to do is extend this purple trend line over, because maybe we do find that as support, which would be right around $40 a share. So I'm just going to extend that out all the way to this downtrend there, which is the top of this parallel channel that we can see here. We've traded in for quite some time. We did break above it, but it does look like we are getting rejected from there. So I would look for this to continue down and for markets to continue higher. But if we do look over at the VIX, this is the Market Volatility Index, which closed yesterday at a price of $24.23, just like the UVIX, being down right around 10% on the day. And it looks like it's pulling back to right around $24 a share. I do have it marked here at $23.76. which corresponds with the highs that were following the big move up that we saw on August 5th. So the high from September 6th was $23.76. So I do have that mark there. It did act as notable resistance over here. Almost got up to it a couple times. Did break above it very briefly. It looks like on December 18th. And yeah, we have spent, like the past week above that level. I think that we could be heading lower. And, I've talked about this light blue uptrend multiple times that had acted as support on the little bounces up here, then approximately as resistance over here, as well as over here. We may very well be pulling back to test that as support. And just like I did with the UVIX, I'm just going to extend this line over a little bit just so we can get it to connect to that orange horizontal line. And so coming down to that light blue uptrend, we'll be coming down to around 22.50. But I think it would be really good for the markets in general for this to come back below $20 a share, where I have this alert here, and for that to maybe come back down to these moving averages. It does look like the 21-day is exactly at $20 a share. Pretty interesting to see that at 20.00. And then also the 50-day moving average is at 18.10, whereas the 200-day moving average is at 16.94. So yeah, it would be good generally for the markets to see this be cooling off. And then let's look over here at the SPY. This is the S&P 500 tracking ETF, which closed yesterday at a price of $558.87, being up about 0.5% on the day, but pulling back just a little bit, about 70 cents or so in the pre-market. And let's see, are there, I'm wondering if there's maybe, a trend line that we could draw that might be suggesting that the bottom is in. And so I believe, draw this trend line over here yesterday or just recently. And so what I might do, I'm actually going to make this a little bit thinner. I've been realizing the thick lines are a little overwhelming for me to manage. And so what I might do is just adjust this to be the low from the day after to see if that looks like we could be at support, but I may undo that if it looks, like we clearly broke below it. So I don't think that's necessarily a helpful adjustment there. So I do think that could be suggesting that this could still go lower, which might be coming down to a price of like, let's see, $546 a share. So do be prepared for the possibility of a continuation to the downside. But what I think would be really nice is for this to bounce up to this little blue doodle circle that I have drawn there, right around $575 a share, which was the low from January 13th at $575.35. That also seems to correspond pretty nicely with this downtrending parallel channel that I have drawn here based on these 3 pivot points, as well as this yellow downtrend, which was resistance over here. Then once we broke above it, we got, I believe, the DeepSeek news gap down, and then also tariff wars gap down. That yellow downtrend acted as support over here until we were able to break above this orange downtrend, but we quickly faded below that. Coming down, let's see, I believe it's right around 10%, to the lows. So it seems like a pretty, 10% correction there. So we'll see if we do get a bouncing up to that little circle there will be about a 4% from the lows, 4% move to the upside from current price. That's about 3%. But we do have that 200-day moving average between where we're at and that circle, and that is at about $570. So maybe that would be acting as resistance, and it does look like, right around 560, that could be acting as resistance as well. That was kind of like this double top over here. And we have yet to close above it this week. We, closed Friday, it looks like, at a price of 575.92, but then gap down and have just continue to have these red candle days. But let's look over at the 10-minute time frame to get kind of an idea of what's going on there. And so what we can see is we got this very nice bounce yesterday, hitting a low of $553.69, a fun level there. Getting rejected, kind of a double top or maybe triple top with this little wick there from the 561.22 level that I have marked there, probably just approximate, so take it with a grain of salt. But then got a pullback after hours, kind of traded flat, but we did get a little bit of a float higher before a gap down into the pre-market. Not quite filling that gap there, but it does seem like it's a little bit weak there, and I can draw. Actually, I probably just want to do a trend line, a little bit of a trend line that seems like, hey, there's some resistance over there. So that might be, an important level for us to be getting above. And so I might just mark that there, going from, the market hours trading here to market hours trading here. So hopefully that does stick around if I do switch over to the daily candles here. And so maybe we would be following that. I suspect not. That seems like a pretty steep downtrend. But, do consider, good to consider that like 545, 546 could be retested, and that might be, a maybe a longer term bottom there before we get a bounce up here. But anyways, let's flip over to the SPX, which is the S&P 500 index. Closed yesterday at a price of $5,599.30, just like the SPY, being up around 0.5%, over here 0.49%. And yeah, let's just keep an eye on this confluence of levels here. That's around $5,770 or $75, right around there. So let's keep an eye on that. We do have the 200-day moving average at $5,737.35. So that might be acting as resistance. And I would say that we are more notably below this green level here at, $5,666.94. If we do, just kind of do a little bit of a comparison with the SPY, we are, closer to that green line with the SPY than we are with the SPX. So maybe that suggests some weakness. And one thing that I should check, because, like over here, we have this kind of consolidation before continuing down. Maybe we have some consolidation here before continuing down. In other words, a bear flag. And I think a nice tell for that would be looking at the volume. And so what we see here is, down move, and then we've just kind of been consolidating around here. Volume's been going lower. So I may be wrong about this, but what that kind of tells me is that, if we had a lot of volume while we were consolidating, that would be suggesting that people are selling and buyers are putting a lot of energy into holding the stock or ETF up. And once those buyers dry up, the volume dries up, it's going to drop. And so we have not seen that. We do see the volume drying up, but holding that level. So maybe we are starting to form a bottom. But let's now look over at Bitcoin, which is right around $83,000. And so, one thing that I've been pretty surprised with is that, over the past 3 trading days, so let's see, 4 trading days, with this day here for the 13th not being complete, we have, created this CME gap up at around $86 to $87,000. Do have an alert here at $86,000 that has not gone off. That gap is still not filled. And so I, just kind of as an experiment, maybe the reason why it's not working is because I'm partaking. I, did like a $10 buy, I think on Sunday here, which would have been the 9th, if I'm not mistaken. And then I added more over here on Monday, just $20 total, so not a big deal. And so I think, getting up to this level, that would be, I make like $2 or something, not a crazy deal or anything like that. But just to kind of experiment, because if we do see this close on a Friday and then it move lower between Saturday and Sunday, that might be a nice swing trade, something to get in the habit of. Maybe putting more than $10 to $20 on it, maybe doing hundreds, maybe getting into $1,000. Just to do kind of a short-term swing, because in all honesty, with Bitcoin this far below $100,000, I'd be fine with throwing $1,000 into it, and that's just for me at this stage. With my additions and the amount that I have on the side, which is really just in in savings, not trying to put it into trading, but at $83,000, I could see Bitcoin being back above 100. And, that would be just a nice swing. And especially if there's a CME gap, that could be a nice, like from over here, let's say my average is right around, let's say it's above, whatever it is, $80,000. Getting up to fill that gap, that's a 7% swing. And if I do pull up the handy dandy calculator, we can see, $1,000 times, a 7% swing. It's $70. Not a crazy amount of money, but that's not nothing. And that would definitely, go into my normal daily DCAs with crypto. So, that's something that I'm kind of intrigued by. I really like the CME gap trade over the weekends. But yeah, we'll see if that happens. Usually it's filled by this time in the week. That has not yet happened. So maybe we get kind of like a double CME gap, leaving this behind if we do go into the weekend, not getting up to $86,000, $87,000. So, that is really, what I am looking for. So hopefully we get up there, but if not, it's cool. It's all good. It's $20. I'm chilling there, and doing my normal $5 DCAs. With Bitcoin, Doge, Ethereum, and then some other dollar DCAs with some other coins. But I kind of want to focus a little bit more on Ethereum. I'm just liking how, discounted that is, how underwhelming it's been. I think that there's going to be some volatility with that. But anyways, let's flip over to ticker symbol URA. This is the Global X Uranium ETF, which closed yesterday at a price of $23.84, being up about 0.75%, but pulling back about 20 cents, or a 0.75% in the pre-market. But let's look over here. So this has come down. It has consolidated after the down move. So one thing to be concerned with is maybe we're forming a bear flag. And so what it looks like to me, though, is, just kind of considering this volume. And, there's a kind of a clear tell here that this actually looks a little bit bullish. It's not super, exciting because it's not super highs or lows or anything like that. But what we see is the low from March 4th. Was $22.91. Over here, it was $22.78. So that is a lower low. So we can connect those points. I might actually make that line thicker for this. And we could see that's a lower low. But what do we see with the RSI? Not corresponding with the exact same days, but if I do actually with that day, it would be a lower low here as well. But just looking at, this being so dramatically oversold there, the RSI below 30 at 2762, I can draw a trend line from there to this day over here. And that clearly is a higher low. So we got a lower low here, higher low here. That is bullish divergence. And also, we have seen that with this consolidation here, volume is pretty low. We did see these kind of bigger spikes in volume over here, but even with this big, red candle day coming down over 5% on March 3rd, we don't really see elevated volume there. We did see elevated volume here on February 27th when we came down less than 4%. So that's kind of interesting. But yeah, with just this consolidation here, maybe this is a double bottom. We didn't really see volume, step in to kind of push this up. Would be nice to see, but we did see this bullish engulfing candle here following that lower low. So I think that's pretty promising, but it does look like it has bumped into the resistance of my doodle there, having hit a high yesterday on, the 12th of 24.38, but of course, I'm joking about that doodle. The 786 there is at 24.51, and that level is based on this retracement over here. And so maybe what we see is a rejection and then a pullback to around $23. I think I had the cursor kind of coincidentally right at 23. I also do have an alert there. So if we do get a pullback to 23, that might be a nice dip buying level, but it also could be, if we're just consolidating down here, that could be the formation of a bear flag, and we could be seeing price heading lower, like maybe to 22.14 here, which is this 1618 extension from this Fibonacci extension up here. So coming down to there, and that would also correspond with, kind of this like a double bottom over here, that make it a triple bottom, I guess. But, what I find, to be very nice is this green uptrend based on those lows over there. And, we did test that with both of the lows over here. So let's see if we can get a move from yesterday's close up to this gap. It's about a 28% move to the upside. So let's keep an eye on that. But yeah, I did want to flip over to Intel, which is ticker symbol. Okay, so I'm just going to start that over. And so, yeah, I did want to take a look at, actually, I'm going to take a pause because I want to turn this into a clip. So let's collect ourselves before doing this. And so let's take a look at Intel, which closed yesterday on Thursday, March. Dang it. So let's take a quick look over at Intel, which looks like it closed on Wednesday, March 12th at a price of $28.68, being up 4.5% on the day. But what's really exciting is during the after hours yesterday, we saw this very big candle. This is on the 10-minute time frame, going up over 11.5% right after the market closed. And so that just looks super strong. Hit a high of 23.50 in the after hours, and that is the high. We have maintained that level throughout the after hours and into the pre-market, currently trading at around $23.20, being up over 12% in the pre-market trading. And it does look like it has bumped into, it looks like the 210-minute and 500-minute moving averages there based on the 10-minute time frames. That's the 21 and 50. We do have the 200 or 2,000-minute moving average, I should say, below us, and that's currently at around 21. But, even if we pull back to 21, that's still up very nice. So I am personally very excited about this. But let's see, looking at the daily, just looking at the moving averages currently, we are trading above 23, like I had said. And we do have the 21-day moving average there in that nice little salmon color there. That is at $22.83. So it looks like we're going to be gapping above the 50-day moving average, which is currently at 21.21, and gapping up to right around that 21-day moving average. If we can get up to around $24 a share, that would be the 200-day moving average, which is currently at $23.98, right around 24. So let's keep an eye on that. I might actually just put an alert there at, let's see, above $24. And I do have an alert there at 19.20 for the below, because that is a level, I was keeping an eye on. We did it just a couple days ago. So on the 11th, we hit a low of 19.29, nearly getting to that level. And I have to say, I do have a small position in Intel, which I believe is just 4 shares. So it's very small. I've been trading options in it. I do have one call, nothing too crazy, but I am excited actually to just take profits on that once the market opens. I'm sure it will probably rally higher, but just kind of want to take that risk off the table. But my average for those 4 shares is at 19.30. I did not buy this dip. Actually, I was, accumulating over here, and there was a level that I had marked at 1920. It might have been a gap. Yeah, let's see over here. So on January 16th, we closed at a price of 1967. So that was not the gap, but maybe there was, I think it might have just been like this consolidation. No, actually, I'm not sure. Let's see. What was the close on February 7th? 1910. The day before, the close was 1938. So yeah, I'm not really sure why I had 1920 marked. It's a video that I'd gone over in the past, and it just stood out to me as being a level to consider. I do have some other levels over here. Oh yeah, this 1886, that's a 786 that goes back pretty far in time. Actually, I have to switch over to the weekly to take a look at that. And let's see, I was looking at some stuff in the log axis, or the log y-axis. So let's actually switch over to that to look at this longer time frame. Yeah, that's just going to be a little bit wonky, but it was based on a low going back to, I think, 2023 and the high up here. And so the 786, if I do adjust this axis, man, I got to really... that goes back to the low from what would have been over here, going back to the 11th of September in 2009. So quite a far retracement going back there, going back far in time, and then up to the highs here from 2021. And yeah, let's just adjust this axis back to the linear scale. And so let's see, what are some levels that we might be going up to. I do have some doodles here. I'm just going to actually delete these arrows. Consider this Fibonacci retracement. It's based on the low from February. Actually, I'm on the weekly, so that's probably why my arrows were looking so wonky. So let's switch over to the daily, and yeah, maybe we can, those arrows might mean something on the daily here. So this is based on the lows from February 3rd going up to the high from February 18th. That's how I get this Fibonacci retracement. So I was looking for, basically a couple scenarios where, could be bouncing from the 50% retracement at 2316. That did not happen. We did not get this move up, so I'm going to delete that arrow. And then I was also thinking, well, maybe we find support at the 618 at $22 or so. Clearly, we broke through that. So that did not happen. We did not get this inverse head and shoulders pattern that I have doodle up there. So I'm just going to delete that as well. We just got this one big red candle going down over 6% on March 4th, and then coming down to this 50-day moving average before finding a little bit of support, but then going lower, breaking below the 786, which was at $20.66, closed right around there yesterday after gapping up. And so I might actually just mark that gap there. So the close from March 11th was at a price of 1978. So I got that marked there. I'm just going to make it a dashed line and make that blue. So we do see that gap to the downside. But like I had said, we're currently trading above this 21-day moving average here, that salmon line there. And we are, looks like, also trading above this 50% retracement there, but might be bumping into some resistance around 24. So it will be very interesting to see. But if we do see a green candle with a continuation up, I think that we could be heading back to, let's see, maybe I want to throw up the volume profile here so we can kind of get an idea of where we might see some resistance. And so it does look like this volume shelf or volume node that we see here, high volume there, that is in the range from about $22 up to around $22.50. So we are trading above that. So that's looking pretty good. Do have all this consolidation over here corresponding to that, and I believe the point of control for the volume here based on this time frame is looks like it's at 22.35, so we are above there. The volume average high though for this time frame is 23.48. Like I said, we're trading right around that level. And so if I do take a step back, maybe we do start to see where this could be heading. We do have this gap up here at 28.87. I might actually remove that volume profile just because it doesn't seem as useful on this time frame. And so yeah, we do have that gap up there at 28.87, has yet to be filled, nearly got to it over here. And then we do have this white uptrend. I'm going to make that one a little bit thicker just because it stands out as being, very notable support over here that ended up being very notable resistance here when we hit that high on February 18th, which was at a price of 27.55. So yeah, do keep that in mind. And so I think that resistance, beginning with 24, that might extend up to around 26, maybe 27.50 with the high up here, also the highs over here. And so, yeah, do keep that in mind. We could be getting rejected from there. So if I were to doodle out what I think might happen with this, let's see, I would say that, we're going to be gapping up to around this level. I would think that we might be seeing a pullback actually at open, maybe coming here. I'm actually going to zoom in on the chart for this doodle so I can just do it a little bit nicer. And so what I could see is, if we gap up to around, $23, let's say, maybe we get a pullback to, let's see, I don't like how this thing comes back. So I just want to get it over to, let's see, this would be where that goes. And then maybe we come down to retest that 618 around 22. Maybe worst case scenario, come down to around 21 to test that 50-day moving average and then get a wick up bounce and then maybe get rejected from that 200-day moving average around 24 before starting to move up and find some resistance where those prior highs were and then get up to fill that gap. And so that time frame is going to be kind of expanded from what I would be thinking would be happening here. And so actually, yeah, that's kind of just a very ugly doodle there. So yeah, I might what I'll do is I'm going to switch this over to the 1 hour time frame. So I have a little bit more, actually those, a little bit more wiggle room here with those doodles because I think it adjusts it to the candles. So let's see, maybe something like this during trading today. But then if we get, a close up, whether it's like this or, above, and then we could start to see this going higher into tomorrow. I think that would be a fine look. That also kind of coincidentally wasn't trying to do it. Puts in an inverse head and shoulders pattern there. And let's see, then this could continue higher. And then looking over to that at the daily time frame. So this is, let's see, for that doodle I can't put an arrow at the end of it. But yeah, I think that's something that we could see. So don't be surprised if we do pull back, like I have doodled over here. I think that would be totally fine. And this could be coming down to around $21 a share before bouncing and then switching over to the daily. I think that over the coming weeks, we could be filling this gap up here. And let's see that from, this gap up price, that would be a move of about 24% from where we're currently at. But if one is patient to buy the dip at 22, that's a 30% move to the upside. Or if that dip is to around 21, that is about a 35% move to the upside. So looking really good there. I'm super excited about this. Whether it's with the shares that I plan on holding, never selling those, or with the call that I'm probably going to sell at open just to take the risk off the table. I am pretty excited about that. And I should note that this was all on the news that Intel hired a new CEO. But now the hard part begins again. So let's see what happens with that. I am pretty excited about it. I hope you guys are too. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Thanks a lot for watching. Take care, you guys. And on that note, since it is just a minute after 9 o'clock now, I am going to shut this stream down so I can get ready for my day, which is going to consist of watching Gareth Soloway and his game plan before the market opens in about 29 minutes. So hopefully this was helpful for you guys. Super fun to dive into the charts here. and I look forward to seeing you in the next one. All right, take care, you guys.